Please read this disclaimer carefully before proceeding further. Welcome traders to this week's analysis of gold, XAUUSD. Thanks for joining me here. My name is Vic. Gold had extremely volatile week last week, and this happened because of unfortunately set of events around Ukraine. That's quite terrible, actually, what's happening there. But I mean, in there's not much we can do here other than offer our sympathies and offer any kind of assistance, and our prayers are with all the people who have been affected by this crisis. In terms of analysis, so gold rose to this level, and almost immediately within a day or so it started to coming back. And the reason behind this is because there are several patterns and several important levels which were actually hit in this process and going this up. So let's revisit what actually happened, what we have been looking at. So if you remember, I published a long-term analysis I think in January, on Jan 13th, right? So this was the long-term analysis, and this has been playing out very well. So all of these moves have already been mapped. So what has happened here is this. So gold actually, let me actually take my pointer. Gold actually completed this W pattern here, the bigger W pattern here, and it completed right here, and which made the gold fall back into the previous midpoint, near about that midpoint, and it can continue to fall back down. However, if it starts to continue to go up, then we have another W pattern, which is this one, that is also present there. So all of these are they are already mapped, and gold has been actually respecting that. There is a small W pattern which actually worked, and it made the gold fall. I reported that in on our Telegram group and other places as well. So let's go and look at um, the chart, specifically what has happened. So this is what has actually happened. So this was the W pattern, which was already posted on Jan 13th. Now gold came to complete this W pattern. It did not quite reach 1981 because that is that extreme limit, but it reached near about 1970 level or so, and then started to fall back down. Why? Because when W pattern completes, the market starts to fall back down, and that's what happened. It went into this. It did not stop at any of these levels. These are like an intermediate support and resistance, in fact, because the market is going upwards. So, but because of volatility, it did not stop anywhere here and stay just went all the way to this level to complete that W pattern. And since then, it has been falling down. Now, there are a few things that you should remember, which we covered in last few weeks analysis. If you have not gone through last couple of weeks of worth of analysis, then you should go through them because there is a lot of educational material in there, and at the same time, it will help you in understanding what gold has been doing on hard time frame. You see, I mentioned that there is a liquidity area here. There are several liquidity areas in this gold chart, but this double top is a liquidity area. And in this process, gold has actually gone above that and taken all the stops above that, and now it is falling back down. So let me actually show you what I mean by that. So if I come to this chart, this was posted on February 2nd, and these are all the liquidity areas which are available on gold. And I mentioned specifically this area is a target, gold. If gold comes close to this, then it will probably go above that, collect all the stop losses, and then come back down. This is a very good area for looking for a short, right? And similar sort of thing can actually still happen on these liquidity areas. So if gold starts to fall, then it can go below this, below this, below this level, and below this level as well, right? Now it may or not happen immediately. It may take weeks and months, similar to what has happened here. It has taken quite a long time to go back to this level, and it can happen again while coming back down. So always think in terms of time perspective as well. We are looking at a higher time frame, so it can take a longer time to actually do all of this. So do not expect this to happen next week. It can happen. Anything can happen in the market, so it can happen next week as well. But because we are looking at longer time frame, just remember these things should be there on your plate. You should be aware of these things, that at some point in time gold can actually come down to collect liquidity below these areas, pretty much what it did last week around above this level here. Okay, so you should be aware of that. Now, these are the important levels that I posted on February 9th, that these are important levels which can market could reach. So if market was going to fall from here, I personally took a short from here, and a lot of other people actually took that as well. And I said, like, if the gold was going to go above 1910 area, then intermediate level was going to be 1927, which was kind of like, just medium priority sort of thing. But it was expected to reach this FCP zone and this trend line. Okay, because of volatility, the market actually went through that, and it went straight into this FCP zone, which is 1967. This is the level which was already given on Feb 19th, right? So from here, the market started to fall back down, and on Friday, it actually went back down into this FCP zone once again, because ultimately this FCP zone was in control. This move to the upside was simply because of volatility. So if you were able to grab a lot of profit from here on this bull move, that's very good. Congratulations on that. But like, you should be aware that these levels are still going to act as support and resistance. Because if you are looking for long now, right now we are, let me actually clean this up. So right now we are back here. We are back here. Okay. So if the gold starts to go up, then this FCP zone will act as resistance once again, because now it has fallen through it. Okay, and if it starts to go back up, then again all of these levels will start to act as resistance. Okay, so always remember, these can be your profit targets if you're going long, and they can also act as resistance. You see, there is not much difference between support and resistance, right? And there is not much difference between how a level can act as profit target, or it can act as an entry target, entry level. The, w- the it, it's it's based on the direction itself. So what I mean by that is, when the gold is right there, I'm just taking an example right now. Okay, so gold is, let's say, around 1900 right now. Okay, which means that this is going to act as resistance. Why? Because the market is going from the bottom to this level, so it is going to act as resistance. Now you should sell at resistance. So if I get a confirmation, I'll sell. Okay, if the market goes beyond this, and if I get a confirmation about this, then I should buy, because now this resistance would have become a support. Now, if I buy, where is going to be my next profit? The next profit is going to be the next resistance level. So I'll probably, like, get out of the position or take partial profits and repeat the process. So you read in steps, right? So this is how the trading is done, right? You do one step at a time. Like, you can anticipate saying that, okay, it can go all the way to this, but you should manage your trades, or maybe you should get in and get out at these levels, right? Okay, so let's go and look at what gold is doing right now and where it can go. So let me bring in the original analysis. This is what has happened. This was the W pattern. Market came here and fell down, and this is right there. This was already there, and it was posted on Jan 13th. Now let's look at the analysis. So if I come here, this is what I was just talking about. So gold came right into this area of 1967.799, this FCP zone. This is above this liquidity zone. I posted that in our Telegram group as well, that this has been cleared, which means that gold was expected to fall back down. It fell down through this FCP zone, pretty much like how it went up, it came back down. Why? Because there were so many sell orders around here at this level, and at this FCP zone, and on this trend line, and in this FCP zone. So there were several sell orders here, and this is what I mentioned in previous week's analysis. If you check it out, that this entire area is basically a sell zone. Okay, so market went through it, and then almost immediately it grabbed those sell orders and started to fall down. So right now, this is below this FCP zone, and it is stuck right now at 1886 level here. So this is acting as a support. So if you have been, like, taking a short, you should be, like, managing your position at this level, because this is going to now act as support. So if the market starts to fall below this, and if you get a confirmation to go short on, then all of these levels which are available on your screen, they are going to act as your profit targets and probably support as well, right? If the market starts to go higher than this FCP zone, and 1900 are going to act as resistance now, because market has come back down below 1900. So this zone is has become again a resistance zone. This FCP zone is a resistance zone now. If the market goes beyond this and if you get a confirmation above this, then this is going to be a profit target or resistance. Then this will be a profit target resistance, this profit target resistance, this profit target resistance, and this profit target resistance. And ultimately, then we will probably reach 2000 as well, because if you are very close to 2000, then obviously it's going to go to 2000 as well, right? So the plan is simpler, same. So watch each level, right? The bias is towards the downside. Why? Because trade what you see. Right now, if you look at the kind of candle it has formed, let me actually hide this and then show you. Right, this is a huge rejection candle, and if you combine this together on daily, on weekly time frame, we have a very good hammer, inverted hammer sort of candle, right? Huge rejection pin bar or sort of thing. So the bias is towards the downside, but trade what you see, right? So just take one step at a time. That's a weekly time frame, and if you're trading a smaller time frame, then you should, just pay attention to weekly and smaller time frame both. So always do a multi time frame analysis. This is a huge engulfing candle, again strong bearish candle. So strong bearish candles are coming in. So the market can, when the market will open, it probably will try to go back up a little bit. Okay, maybe into one of these structure areas and then start to fall back down. So that's the bias is. Like, let's see on smaller time frame what can happen. So it is stuck right now as at 1889 or 1886. I can't read here. They are very close to each other. Why? So I'll take it 1886 is the number. Right. So if the market starts to go up, then this FCP zone is going to act as resistance, and then you should look for a short. If the market goes above this line, above this FCP zone, which is 1910 area, then this will be a profit target. So read one step at a time. Okay. Now let me go to Vata and Visage and show you what has actually happened. So if you have Vata and Visage, it would have already told you a few things in advance. See, on weekly time frame, it has been able to hit this target perfectly. But this is how you read. This is the blue, which means the buy. Then you have the blue, which means the buy. This is blue, this is blue. Everything is bullish. And this one turned out to be the target. This target was hit, this target was hit, this target was hit. These white dots are the targets. In fact, this target has also been hit. Okay. And now, the only above, only bullish target on weekly time frame is left around here, which is near about. Let me actually put a line so that you know where that target is. So that target is near about 2033. So if the market continues to stay bullish, then that can be reached in few weeks or few months time, because we are looking at weekly time frame. So that's the weekly time frame. Now let's go and look at a monthly time frame. On monthly time frame, it has been able to reach this target here very nicely, because we had this this buy signal here, and this was blue, this is blue, and now it has been hit. Now remember what I mentioned few I think couple of months before, right? If the candle was going to close below this, then it was going to come back down into this. That was the bearish move, and it was going to impact this. But because this candle closed above the previous signal area, that means it was going to turn into bullish mode. So this is how you read Vata and Visage here. Now let's go and look at it on a daily time frame as well. You can clearly see how the W's and all of these patterns were formed. So let's go back and look at this. So hopefully you have found you have got the trading plan ready. Make sure that you pay attention to these liquidity areas, right? Going forward, and always go back and rewatch the previous analysis, because when I'm doing these analysis, sometimes I'm not actually repeating the points which I've already mentioned in previous analysis. So make sure that you watch at least 2 weeks worth of analysis from the previous weeks, right? And that should give you a fair amount of idea what was expected and what has happened and what can happen in future. But follow these levels, trade what you see, right? Do not expect do not believe in hype or anything. Always manage the risk, especially in these conditions. Risk management is absolutely essential If you're not feeling comfortable in trading these days, then do not trade. You do not have to trade every day. You do not have to trade every candle. You do not have to trade every market, right? You do not have to, right? So just stay out. If you are in doubt, stay out. You do not have to trade. So, right, so manage your risk, have the stop losses in there, have a plan, and always read the market in steps. Okay, and I'll leave you with that, and hope you have a great trading week next week. If you enjoyed this analysis, make sure you support our posts on social media, share it with other traders and trading communities, and hit the like button and subscribe to this channel. And I'll see you in the next one. Have a great. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.